Invest for the long term. Why it matters for bonds, stocks, and crypto. Hello, and welcome to our video on the untapped potential of time horizons in the wild world of investing. In this thrilling adventure, we'll dive into why knowing your time horizon is the golden key to creating a successful investment strategy. So buckle up and let's get started. When it comes to investing, one of the most critical factors to consider is your time horizon. Your time horizon is the length of time you plan to hold onto an investment before cashing in your chips. Understanding your time horizon is crucial to making killer investment decisions, as different types of investments have varying risk profiles and potential returns based on the length of time they're held. In this video, we will explore the importance of time horizon in investing and discuss how it applies to different types of investments, including bonds, stocks, and crypto. Chapter 1. Bonding with bonds and time horizons. Bonds are debt securities issued by companies or governments, and when you purchase a bond, you're essentially lending money to the issuer in exchange for regular interest payments and the return of your principal when the bond matures. Think of it as a long-term loan with benefits. The longer the maturity of a bond, the higher the interest rate will be. This is because longer-term bonds are considered to be riskier than shorter-term bonds. So if you have a long time horizon, investing in bonds with longer maturities might just be a match made in heaven for your investment strategy. However, if you have a shorter time horizon, investing in shorter-term bonds may be a better fit. Short-term bonds tend to be less risky and have lower interest rates, but they also have a lower potential return. It's essential to weigh your time horizon when choosing between short-term and long-term bonds, as choosing the wrong one might lead you in a sticky situation. Chapter 2. Time horizon tango with stocks. Stocks represent ownership in a company and can be a fantastic way to earn a higher return on your investment over the long term. However, stocks are also considered riskier than bonds, and their value can fluctuate wildly in the short term. This is why it's essential to have a long time horizon when investing in stocks. If you have a long time horizon, you can afford to ride out the roller coaster of the stock market, and you may be able to earn a higher return on your investment over time. However, if you have a shorter time horizon, investing in stocks may not be the best fit for your investment strategy. It's essential to weigh your time horizon when deciding whether to invest in stocks, as playing the stock market without a plan might leave you with a sinking feeling. Chapter 3. Cryptocurrency craze and time horizons. Cryptocurrencies, like Bitcoin and Ethereum, is a digital or virtual currency that uses cryptography for security and operates independently of a central bank. Crypto has become a popular form of investment in recent years due to its high potential returns. However, it's also considered one of the riskiest investments, and its value can fluctuate wildly in the short term. Due to its high risk, it's vital to have a long time horizon when investing in crypto. If you have a long time horizon, you can afford to ride out the stormy seas of the crypto market, and you may be able to earn a higher return on your investment over time. However, if you have a shorter time horizon, investing in crypto may not be the best fit for your investment strategy. It's crucial to consider your time horizon when deciding whether to invest in crypto, as dabbling in crypto without a plan might leave you feeling like you're lost at sea. Chapter 4. The Symphony of Diversification and Time Horizons. One of the most effective ways to maximize returns and manage risk is through diversification, or spreading your investments across different types of assets like bonds, stocks, real estate, and crypto. Diversification can help reduce the impact of a downturn in a specific market or asset, but it's essential to keep your time horizon in mind when creating a diverse portfolio. If you have a long time horizon, you have the luxury of investing in a mix of assets, including riskier options like stocks and crypto, with the potential for higher returns. However, if you have a shorter time horizon, your diversification strategy should focus more on conservative investments, such as short-term bonds and stable dividend-paying stocks. By tailoring your diversification strategy to your time horizon, you'll strike a harmonious balance that can help you navigate the unpredictable world of investing. Chapter 5. Riding the waves of market cycles and time horizons. Market cycles can play a significant role in investment performance, and understanding the relationship between market cycles and your time horizon is crucial to maximizing returns. Market cycles consist of alternating periods of expansion and contraction, characterized by bullish and bearish markets. If you have a long time horizon, you can ride out the market's ups and downs, staying invested during both good times and bad. This approach allows you to benefit from compound interest and the long-term growth potential of your investments. However, if you have a shorter time horizon, you may need to adopt a more cautious strategy, potentially moving in and out of markets based on trends and economic indicators to protect your principal investment. Conclusion. In conclusion, understanding your time horizon is the secret sauce to making sound investment decisions. Different types of investments have varying risk profiles and potential returns based on the length of time they're held. Bonds, stocks, and crypto all have unique characteristics, and it's crucial to weigh your time horizon when choosing between them. By taking the time to understand your time horizon and how it applies to different types of investments, you can make more informed decisions and potentially earn a higher return on your investment over time. Thanks for watching, and don't forget to smash that like button and subscribe to our channel for more exciting videos on investing and personal finance. Until next time, remember, knowing your time horizon is your secret weapon for navigating the thrilling world of investing.